You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts Alex the Viceroy Jacobson from Options Express, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, everybody, that music means it's time once again for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-expanding, ever-exciting Options Insider Radio Network. And where can you find all of that great programming? Well, of course, the mothership, the website, you can find it all there, as well as all the unusual activity alerts and the educational articles and the analysis and the breaking news and all the other fun stuff we put up there on a daily basis. It's all there, of course. The radio also available, iTunes, Stitcher, AHA Mobile, TuneIn Pro, wherever you find your favorite audio programs, Dog Catcher, Dog Pound, whatever it's called. A bunch of them out there to choose from, many, many podcatchers of choice. And of course, you can find them all in our mobile app, available for iOS, Android, and the Fire OS. You can instantly stream all 300 plus episodes of this here Option Block. And while you're doing that, maybe you say, hey, I want to save a couple of these for when I'm on the train. You can do that pretty easy. Just hit that download button. And then when you're done, say, hey, I want to shoot these guys a question or a comment. Hit that feedback tab. You can do it. We're all built in to the app. Shoot us a Facebook question, an email, a tweet, leave us a voicemail, whatever floats your boat, you can do it. It's all baked right in there into the mobile app, available iOS, Android, and the Fire OS. All right. And joining me on the old program today, the usual cast of characters. The panel is fully assembled once again, starting off with the man, the myth, the legend, the uncle himself, Uncle Mike Tusaw from RCM Wealth Advisors. Uncle Mike, welcome back to the show. It has been too long, sir.
Great to be here as always. Wish the weather was a little bit nicer today looking out my window, but hey, it has to rain every now and then. I imagine you even get rain in Maine sometimes.
The rain in Maine falls mainly on the plain, actually.
Always beautiful, and the paradise is known as St. Charles and also Maine. And we are joined from all the way the hinterlands of Maine listeners by none other than the Rock Lobster himself. You just heard him, Mr. Andrew G. Andrew Giovinazzi from The Pit. Mr. G, welcome back to the program, sir.
Thank you. It is always a pleasure to be on the Option Insider Radio Network, the ever-expanding, I might add, Option Insider Radio Network.
You might add that, yes. There is expansion in the works. It's cooking as we speak. All sorts of fun stuff coming down the pike. So stay tuned, listeners, to wherever you find this here fine program, because there's more coming your way. And joining us on the panel last, but certainly not least, the last seat on the old All-Star panel, filled up by the man of many hats, a.k.a. the Viceroy, Mr. Alex Jacobson from Options Express by Charles Schwab. Mr. Viceroy, welcome back to this here show.
Thank you, Mark. Good to be here today. And I'm going to use a term that I thought I would almost never use, but profit taking today. We saw people exiting positions. So looks like our client base lost a little conviction today.
Interesting, because the market had a little bit of strength, but we'll get to that in the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, as the man said, this is the portion of the show where we break down what was trading, what was catching our eye in today's markets. And it was a bit of an upside day, not an aggressive upward move by any means, but most of the major indices closing up a fraction of a percentage point or so, about a third of a percentage point for the S&P, and the Dow and the NASDAQ up a little over a tenth of a point, so pretty much barely more than unched on the day. But the big news of the day wasn't the indices, it was really what was cooking in that fruit company. You know, we've talked for a while here on this show, when they're going to do it, when they're finally going to pass that all-important psychological level of 100. Well, they finally done it, so all eyes were on Apple today. And Uncle Mike, I'm guessing your eyes were glancing that way as well. What do you make of this finally reaching this historic high here in Apple?
Well, to me, I think the historic high of what we need to look at is 101, to tell you the truth. I think the all-time high...
You're never happy, are you? You get to 100, and now you immediately want 101.
I know. I'm just a greedy SOB, aren't I? I think that... I believe that the all-time high was... split adjusted $100.72 or something along those lines. And so what I'm looking to see with Apple, I will jump on the bull train of Apple. I guess I'm a bull already, but I'll really become bullish if we can close above the 101, 102 level, kind of establish some type of a base above that. And if that's the case, I think Apple's going to be off to the races. But right now, I'm just at my fingers on the trigger bull. I'm not my finger has pulled the trigger bull quite yet, although I do have a lot of exposure to Apple already.
Yes, you and everyone else waiting for that all-important psychological level of 707. I know everyone had their fingers crossed for that one.
I want to see new all-time highs.
So you haven't really pulled the trigger, like you said, on anything yet. You haven't done any adjusting. Are you still short calls to the upside? You letting the upside fly a little bit? What's the deal?
Upside's been flying, baby. So just basically just long stock, long puts, and for now, and then I'll probably be purchasing some more calls or selling some more puts. But I want to see new all-time highs. I'm just greedy that way. So
what you're saying to us then is when you're recording the show, you're naked to the upside. Is what you're saying?
That's a whole lot of Tucson too.
That is a whole lot of Tucson. Yes, a little disturbing image for all of you out there listeners. Perhaps let's quickly change gears. Oh,
just more of me to love.
Before we do that, Tucson,
ex-football center's naked to the upside.
I'm sure there's a calendar like that somewhere for a certain audience out there. Perhaps not our audience, but someone out there is into that sort of thing.
Someone is going to get into it.
I'll tell you guys a true story now. You want to get onto that note?
Now I'm disturbed and scared. Where are you going with this?
I was coming out of the shower in Buffalo one time, and I accidentally walked around the corner to a 365-pounder, I'm not exaggerating, drying himself. And so I got closer than I had intended because he was right around the corner. And so in my brain, I thought to myself, if I'm ever tempted to cheat on my wife at some point, this is the mental image I'm going to put in my head, and that'll immediately turn me off for life.
Wow.
It was that gruesome and that awful.
That
was the rabbit hole.
Yeah, we got so dark so fast this episode.
That's a disturbing image of all time there, Uncle Mike. I think with that, I perhaps will toss it away from you if you don't mind. Quick, Andrew, pull us out of this horrible, horrible, dark place that we fall into.
Oh, my word. What I would say today is we actually had a lot of lively discussion in the option pit chat room today about, one is we had some good trades, some clients short gamma from the close yesterday to today, kind of in between Fed announcements. So the market didn't do much. It was a great trade. What I am noticing, though, is there's a huge rubber band effect on the VIX futures. They're really being stretched quite far. We haven't seen future premium over cash like this in quite a while. And, you know, my sense is if Yellen thinks I think the volatility wants to go down, but the futures aren't going to come down until Yellen speaks. And when she does, I think that will lift that will let a huge burden go short term. And we could see ugly low vol levels tomorrow. Or she surprises everybody and says, well, we're going to raise rates a little faster than we just said in the minutes yesterday. And SPY's trading 190 again. So I kind of feel like that's what the scene is sort of setting up to. We're either run to break the 200 mark in the SPY, or we're trading, 192. That's what tomorrow feels like. That's what it feels like the stretch in volatility was feeling like today.
And when it was breaking vol news, I always looked to Jackson Hole for my news in that area. Just the mecca of all things finance.
You know what? I'll tell you what, though. If you become big enough, when you have a party, it's in Davos or it's in Jackson Hole. I mean, and it's all expense paid, fun to like most beautiful place in the world. So clearly I am not quite high enough up the food chain yet, as much as I thought my spot in the Option Insider Radio Network was pretty high. It's not getting me that invite to Jackson Hole. It's kind of bumming me out a little bit.
The big party's in Maine, I would imagine.
But it's big, but it's small.
Tell you what, I'll give you mine for next year, Andrew. How about that?
I appreciate that. Maybe the Viceroy can get us in there. He's got to be big.
He's got connections for everything. Speaking of those connections, Mr. Viceroy, what was catching your eye? Who was calling you up today? What was the squeal? What was going on over there at OX by Charles Schwab today?
Profit taking. Interesting. We looked at when I spoke to the desk. People seem to be raising a little cash today. They didn't seem to be hedging. They weren't running the VIX calls or Spider or SPX puts, but stuff was getting sold today. Both stock and profitable call options and short puts were getting bought back. I think the general tone today, by looking at the order flow, looking what went onto the routers, were folks saying this market looks a little extended. And to both Andrew and Mike's point, maybe there isn't as much certainty about what Yellen will say tomorrow, although I think all Fed chairmen and chairpersons have learned to be careful what they say in terms of how they impact the market. But people seem to be taking some money off the table today. So it actually, the market, I mean, the averages were what the averages were, but the underlying market didn't look as good as the averages. And we closed weak. I mean, we always talk about tearing up our notes the last 5-10 minutes of the day today. We clearly were rallying into the last half hour and then sold off in the last 5-10 minute period. So there seems to be a little caution going into Yellen's talk tomorrow.
And, we do our show here on the network once a month, the advisor's option, but it is monthly, and sometimes things happen in that area that are kind of interesting, and I'd be curious to get your take on this as well. Uncle Mike, the OIC, obviously the Options Industry Council, they do a lot of research and a lot of work into this area in terms of outreach to financial advisors, trying to get them on board the proverbial options train. And they do a study every year looking at how advisors use options, and pretty much for the most part these days it's been pretty much how they don't use options. But their study, they just released the latest version of it, the annual update to it, and they found some interesting stuff. In their 2014 benchmark study, they found that 3 out of 5 advisors have used options in the past 12 months. That's interesting in and of itself. A 13% increase since the 2011 study, and they found that advisors surveyed in the study anticipated their options use to grow 43%. That's an odd amount, but c'est la vie, in the coming year. The new study also found that advisors are using options with more of their clients in 2014, and that options users are twice as likely to have larger, more successful businesses. And they also found that the methodology for this study was they surveyed 600 advisors across various distribution channels on how, when, and why they used options. Their findings showed that more advisors started using options in nearly every distribution channel from 2011 to 2014. And not surprisingly, income generation and risk management cited as the 2 biggest reasons for using options in the past year, and advisors most frequently indicated that they manage option strategies on their own. Also interesting, not sub-advisors. Not surprising, also, the covered call was the strategy du jour amongst advisors. That's pretty much what we expected. That's the primary use case for a lot of advisors, the covered call, and then the risk management aspect. They add a put to it, they get the collar, and they're pretty much done. And they also found that advisors are more likely to, one more time, they also found that advisors are more likely to discuss option strategies with their clients compared to the previous study. So another good thing for people who tend to use options in the financial advisor realm. Uncle Mike, as our token financial advisor who uses options here on the old program, what's your take to these numbers and to the OIC study?
Oh, definitely not surprising. I remember just talking to a gentleman who used to work in our office. I think we even talked about this on the show before. With the covered call, you're never going to be wrong with your client. Market stays still. Oh, thank God we got this covered call. Then you get time decay. Market goes higher. Then all of a sudden you can say, oh, well, hey, you're making money. The call was in your way, but you know what? You're making money. And if the market goes down, then you can say to the client, oh, thank God I sold that call option. We're making some money. I'm a smart advisor. So with a covered call, you're never wrong. You always have something positive to say about it. Now, of course, if the stock goes down 40%, the 2% or whatever you took in on the covered call isn't going to be much good. But for the most part, I think one of the reasons that a lot of advisors cling to the covered call is because, and people in general, not just advisors, you always have that in your head. You always have that positive thing with which you can have something positive happen no matter what happens. I'm happy to hear that now, if you said 3 out of 5 advisors have used options, that's actually I'm very surprised by that amount, just because of the fact that the way with which I get is through some type of online medium, in that there's plenty of people out there who want to use options in their long-term portfolios in one way, shape, or form, but it's not going to be through word of mouth or through things that you'll see at the local party, just because it's something that it's not quite as mainstream as it should be as of yet. So with that in mind, I think that it's good that more advisors are starting to use them in one way, shape, or form, but I'm hoping that they're using them in a good way and not just the kind where they're better off trading bubblegum cards than trading options type of advisors.
Yeah, I like these guys at the OIC. We obviously do a program with them where we dive into all this, and we'll get into these numbers a lot more on that program, listeners. And I don't question their methodology. I'm sure it's all very sound and up. But you're right. To me, anecdotally, from my own experience interacting with the advisor audience, that just seems to be an astronomically high number. I would have guessed a far smaller percentage of advisors have actually touched options. So saying something like 3 out of 5, essentially 60% of advisors out there have used options in some capacity. I don't know. I kind of fall with you, Mike, that sounds perhaps a bit high.
Now, could that be that maybe they're using, because sometimes maybe mutual funds will occasionally throw in a covered call on 1% of the whole portfolio. Would it account? Are they counting that perhaps?
I would hope not. And I would wager most of the advisors probably wouldn't even know that aren't using options, So yeah, I don't know. I will get more to the heart of this when I talk to the OIC folks on our advisors options show. And I sincerely hope these numbers are indeed reflective of reality, because that would be awesome.
That would be great for the advisor community.
Yes, it would, and it would be great for clients and everyone out there. But it just anecdotally, I don't see it, which is so that's why I wanted to get your take as well. Sounds like you're on the same boat as I am, the Doubting Thomas boat, sir.
Yeah, I normally don't like being the one to rain on people's parade, but I have to be that person this time.
All right. And as the rain winds down, we're going to roll on into our next segment. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the show where we break down the interesting and perhaps the unusual options activity that's lighting up our tape today. Going to kick things off with a newcomer here. This is Jarden Corp. Ticker symbol JAH, closing today $58.25, up about 65 cents or a little over 1% today. And this is a name that does about 300, nearly 400 contracts a day. So typical odd block size, not exactly a world beater when it comes to options volume. What caught our eye today was some interesting and relatively sizable paper for this name. Going up in the Sept expiration cycle was the Sept 60 calls that caught our eye when we wrote them up this morning on the site. They went up 1,281 times for 55 cents. Went up as a sale, but the 55 bid sent there was a strong 55 bid out there for a bunch of them. And as you notice throughout the rest of the day, and if you notice the volume here on the rest of the day continued to pile in here to the tune of a total of 3,373 contracts going up on this strike. So fairly sizable volume here on this one strike, about 8x their ADV just right here alone. So very, very sizable day up here in Jarden Corp. A lot of two-sided paper going up here, but on balance, it seemed like there was sizable call buying. Again, a lot of opening paper, only 1,129 contracts open on this strike. Mr. Lobster, what's your take here on Jarden? If you're not familiar with these guys, listeners, they are a global consumer products company. And if you want some long reading, read the list of brand segments and brands that they control here. I'll just give you a sampling. Food Saver, Healthometer, Homes, Dicon, Fiona, First Alert, First Essentials, Pine Mountain, Spontex, and Tygex. So there you go. Quite an assortment of brands. What's your take here on some upside action here in Jarden?
Plus they have like K2 skis and marker bindings and Stren fishing line, like all this. It's all stuff for Maine. That's what they do. Everything from.
I was going to say, it sounds like it's right up your alley, this company.
Oh yeah, for sure. It's everything for vacation. But for these calls, what happened was basically, I think a size buyer came in. The options were like, there was almost no bid really for the options this morning. Size buyer came in, lifted the offer, and then that resting bid was filled, and that's what produced the kind of the size trade I saw. So, my guess is somebody had to have these Sept 60s and probably, like fund manager or whatever, just decided to take the buy right. I mean, the volatility in the stock, it doesn't do much for like kind of having robust sort of consumer cyclical goods that they sell. The stock actually hasn't done much this year. I don't even think it's up on the year, actually, to be honest. So I think somebody just took the opportunity. It's between earnings cycles and hit the 60 bid. Who's ever buying these calls for 60 though, I mean, in September, the odds of it going up there are like slim to none. So maybe they think it's going to be taken over. I don't know. Or Kramer liked it again. I think this is one of his favorite stocks. So, but it's I think 60 is a stretch by September cycle with a month to go or 5 weeks to go. So it would have to be making a move that it has not been able to muster since, January. Made a power move last year and has done a gazzo this year. So, but it's a very aggressive buy for anybody wanting to buy premium.
Not even you can buy enough K2 skis to drive this one up to make those calls pay off.
Exactly. Although they have lots of cool stuff. Lots of cool stuff this company.
This and LL Bean are pretty much your two go-to stops, huh?
Oh yeah, well yeah, LL Bean's only about 20 minutes away from where I live, so it's
daily visit to LL Bean, get the boots shined. I love it. All right, next up here, kind of a reprise here of some activity we saw going up earlier this week. This is China Finance Online, ticker symbol, of course, JRJC. Why wouldn't it be? And if you remember, listeners, earlier in the week on the website, we profiled, and of course, this is why you should visit theoptionsinsider.com to not just listen to the shows, because a lot of alerts and a lot of other content going up there. And we profiled some call buying going up in JRJC back on August 19th, to be precise. And here we are now today, seeing it come up again. In particular, what we saw today, this is the name, of course. Before we even get into that, let me give you the specifics here in case you haven't read the earlier alerts. This one trading today, closing right around $9.74. So a fairly robust day, up about 60 cents or a little over 6% today. A name that doesn't really do a heck of a lot from an ADV perspective, about 600-700 contracts a day. doing a fair amount today. What we profiled this morning was 98, yes, 98, count them, of the Sept 10 calls going up for $2. But that wasn't really what we were focusing on. That was a big block. That went up in one block. Surprise, surprise. But what went on the heels of that was it really caught our eye. We saw 2,700 more going up shortly after that, with paper mostly buying. And as the day continued, more piled in to the tune of just a hair under 5,000 total contracts going up on this Sept 10 strike. Again, paper buying pretty much all day long on relatively weak open interest, only about 1,300 contracts open on this strike. But this has kind of been the narrative we've seen of late here, Andrew, is paper buying premium out here in China Finance Online. And so far, at least, given today's move, this hasn't exactly been ill-timed paper, at least not yet.
No, they just kind of keep buying it and just waiting for the squeeze to squeeze it higher. So when I profiled it, it was up probably at the high point of where it was going to trade for the day. I think it was only up about $1 by the end of the day, but still, think of it this, they could be the OX of China. They're the first approved, I believe, mobile trading platform for Chinese equities, and as far as I can tell, there's a lot of potential consumers out there. So if you were short the stock prior to this, that might give you cause for concern, which is why the volatility was up 40 points today in September, just 40.
Yeah, we should mention, listeners, this stock just a couple of days ago was trading $4 and change. So this thing has been on a tear, most of it likely due to the short squeeze Andrew was just referring to. And a lot of these calls we've been detailing have actually been probably a lot of shorts looking to get deltas and hedges off any way they can. This guy, obviously, if these people are still shorts, they're obviously desperate at this point. And they've already taken a pretty sizable beating out here, and they want the pain to go away. Either that or someone perhaps thinks this run can continue. That's a little bit perhaps aggressive given the super size move it's already shown, but I suppose we'll wait and see. We've been watching this one all week, and it's been an interesting one to watch as the shorts continue to squeeze it higher and those calls get gobbled up. So we'll keep this one in the file to be watched here as we move on to our final name. This one is, I believe you pronounce this Macerich Company. It could be Macerich as well. Ticker symbol MAC or MAC. This one closing today, $65.47, essentially unched on the day. And this is a name that doesn't really light up the tape like a lot of the names we talk about here, doing about 300 some odd contracts a day. Today, though, a little bit of an exception. We saw some decent paper going up out here. In particular, what caught our eye looked like a roll. In particular, the Sept 70 OC 65 call spread going up for $2 even. As we profiled it, it went up 2,000 times. Looks like that's pretty much the lion's share of the volume that went up today. Open interest on that Sept strike, 5,600. So it is potentially that this guy could have more open. Looks like probably was a buy rider who had written that 70 strike. It went pretty well for him. Macerich not really doing much of late, so those Sept calls came in pretty nicely. He's taking it and rolling it, and now rolling it, interestingly, to a more aggressive strike, rolling down right pretty much to the at the money, the 65 strike here in October. So perhaps he's deciding that 70 is no longer where the action is, no longer where the juice is. He's got to play close to the fire to get his money on this one. What's your take here, Mr. Andrew, on this guy? Not rolling up and out, but rolling out and down this time here in good old Mac.
Yes, I think this is like a fund manager, whatever, earning their money, trying to add a little value. When I saw them write this, there was decent premium in the 65s. I mean, it's a REIT, so it's hard to get any dough out of them. It pays a pretty big dividend. So it looks like they're writing this sort of outside the dividend cycle, just prior to. Yeah, and looking for, want to keep the stock, want to keep some upside, and trying to make a little bread like we have profiled earlier today. This in the money call play with the market at all-time highs, kind of a little safer way to still generate what you hope are better than CD returns. Obviously, there's risk in a buy right like this, but selling that in the money call gives you a lot of protection in a REIT that you don't expect a whole lot of movement in.
All right, good stuff. And listeners, you want to play the home game, surf on over to theoptionsinsider.com. You can see more details on these alerts as well as all the ones we didn't have time to get to here on the old program today. And now it's time for us to keep on rolling right on into the fancy hat block, a.k.a. the Xpress Block.
The Express Block, brought to you by Options Express by Charles Schwab. Options Express by Charles Schwab lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources. Options Express by Charles Schwab is the online broker for all traders. Best of all, Options Express by Charles Schwab lets you trade stocks, options, and futures all in a single account on powerful yet easy-use trading platforms, including mobile devices. Visit optionsexpress.com for your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
All right, listeners, you know him, you love him as the Viceroy. It's time for him to don his fanciest of fancy caps and take us behind the scenes into the land known as OX by Charles Schwab. Alex, you said it was a bit of a profit-taking day over there at OX as the clients were taking their money and running. What else was cooking over there in the land of OX?
Yeah, well, they weren't running. They were just taking a little money off the table. What else was cooking? Today was free pizza day at every major Schwab and OX facility in the country. And what we were celebrating is the importing of the 3 and 4 leg trade ticket from OX to Schwab. And I know I sound like a broken record when I talk about this, but this is a big deal. And Schwab Street Smart Edge, their advanced platform, will be bringing the 3 and 4 leg trade ticket beginning around the first week of September, maybe the second week of September. And a couple things to think about with Schwab having the 3 and 4 leg trade ticket. It means, number one, Schwab customers now will be able to do flies, condors, back spreads. Number two, Idea Hub premium harvesting will now have an opportunity to be used fully on the Schwab side because that's an iron condor, quantitative iron condor finder. So in the next couple of shows, I'm going to be talking about some iron condor webinars that I'll be putting up on the OX side. And then probably mid-September, the OX education crew is going to be putting up some 3 and 4 leg webinars on the Schwab side. I just built a Greeks and volatility webinar that's going to go up on the Schwab side in early September. So we're kind of raising the bar on the Schwab side. And I know Schwab customers, the ones I've spoken to, have had just an appetite for more derivative stuff. And this is going to be one of the dividends of the OX acquisition. That $1 billion they spent is going to get them the DNA of what we do at OX. So we got some survey results today, and I'll give you this kind of the short version of it is more options, more futures, and that's what's coming. And they'll see the 3 and 4 leg trade ticket first week of Sept, middle of Sept, and then little by little more of OX will integrate into Schwab Street Smart Edge, Schwab.com, and Schwab Mobile, and we're all very excited about that.
Good stuff, as always. I must have missed my invite to Pizza Day, Alex, so I'll be expecting my deep dish to be coming to my door any moment now.
Take you out myself. We'll get a pitcher of beer and a deep dish.
Sounds good. All right. And listeners, we're going to flip the script a little bit today. Uncle Mike couldn't make it on Monday, but he's dying to do some strategery. So we're going to flip the script and bring the strategy block to Thursday today because it's time to do some strategery.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, Uncle Mike, our listeners were left wanting on Monday's show. They come in every week hungering, dying, perhaps, hopefully not, but perhaps for some options, wit, and or wisdom from you. You left them hanging. What do you have in store for them today?
All right. Well, first of all, my apologies for leaving them hanging. We had important business to attend to up on the mountaintop on Monday. But nonetheless, for the strategy that I want to go through today is the strategy of patience. And I talked about it a little bit at the beginning of the show. I'm waiting for Apple to go a little bit higher until I make my move, so to speak, in terms of getting more delta exposure to Apple. Now, what I'll do, like I said, it'll be a variety of short puts, long calls, something along those lines. Don't know the exact formula yet, but nonetheless, I got my eye on a few things, which I will definitely give you guys notice of what I do once it's done on this show. But I want to go through the importance of patience on this. Another area with which I've been waiting to do something with is with gold. Over the course of the last couple weeks, I don't know how closely you're following gold, audience, but if you are, it's been kind of like watching paint dry. And then today we had a down day, and so today, the position with which I've been in has been long stock, long puts, or long GLD puts. And then today we had a down day. I sold some put spreads as a means of financing. So a couple of things with which I want to emphasize on this. If you don't have what you deem as a AAA trade, then there's no sin in staying in cash. One thing that I will guarantee is if you're in cash, you won't lose any money on the trade, and you won't have to worry about anything. Well, I guess you have to worry about wherever you're holding the cash defaulting, but that's a much lesser worry than market risk. The other thing with which I want to mention in terms of the psychology of trading and why it's hard to do sometimes is that the second that you move money from cash into the market, whether you're buying a stock, a future, an option, whatever the case may be, you're giving up control of that money. And if you're under the illusion that you think that you're not, you are fooling yourself, my friend, because anything can happen. Now, don't get me wrong. You have defined risk, defined reward through options, which we preach about all the time on this show. But the bottom line is that you are not in control of your money when you are in a trade. I don't care if you're shorting a put, buying a call, doing a spread, a condor, a butterfly, a ratio, a calendar, you name it. You do not have control because anything can truly happen. And that's a risk with which it needs to be respected at all times. Now, the flip side of that is that if you're in cash all the time, well, you're not going to make any money. No one's ever made any money just sitting in cash. Well, maybe you'll make the anemic 0.05% or whatever the interest rate is at whatever cash establishment with which you're working, but you're not going to make any legitimate money on that. So what I wanted you to take away from today's strategy block is patience. And by being patient, if you're in cash for an extended period of time, nothing wrong with that. But make sure that if you do have what you deem as a AAA trade, in my case, I want to see Apple go up another $1 or $2, that's going to be a AAA trade for me to become more bullish and ride the momentum up with Apple, hopefully. Now, obviously, I'll have risk management in place like we talk about on the show all the time. But if you get that, you have to have the courage to actually pull the trigger, because if you don't have that courage to do so, you're going to have the opposite problem of losing, and that is never making any money. So with that in place, have a good balance of what you're trying to do, whether you're trying to do a portion of your portfolio as part of a hedge, whether you're trying to do speculative trading, whatever the case may be. And that is all I have for today.
All right, thank you for that, Uncle Mike. And now, because it is Thursday, we want to squeeze in some of your guys' mail, so we'll dive right into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, and welcome to the Mail Block. Like the name implies, this is, of course, the portion of the show where you guys get your chance to join us here on the old All-Star panel. Make your questions or comments heard, and everyone, including you listeners, put on your listening ears here because we have a relatively detailed question coming in from Pat. And he writes, "Love the show. It's really great, and even though I'm clueless, as is shown by the following, here's one that might be good for your could have done the trade better segment in the options block. The following is a list of trades that I have made around Goldman Sachs. Sorry, I don't have the volatilities or any other data from the trades, but hopefully you'll be able to explain the error of my ways without them. Once I made the initial trade and Goldman Sachs didn't rebound quickly, I was trying to offset the cost of keeping the call since I expected that October was plenty of time to get back to the 175 area. And then he gets into the litany of this trade, listener, so pay attention. It's a lengthy tale, and a sordid one indeed. He starts off on March 27th. He buys two of the October 170, 180 call spreads. He pays $3 even for it. And he has his prices here, 642 and 342, works out to $3 even. And he doesn't have the prices of the underlying here, listeners, but I pulled it up for March 27th. Goldman Sachs was trading at 162.29 that day, so keep that in mind as we're listening. Then he next trade came in about a month later, April 25th. He closed the 180 calls, the short portion, on the 25th and the 28th, one for 175, one for 150. Remember, he sold them initially for 342, so he's buying them back now. So clearly, he don't have to look at the underlying to know Goldman Sachs dropped off quite a bit in that period. And if we pull up the chart here, Goldman on April 25th was trading. Actually, it had rebounded back a bit. It was up to 158. It had gotten as low as 152 in that time frame, so he had some opportunities to buy those calls back fairly cheaply. So that might be the first part, is scooping them up a little bit better, but c'est la vie, we'll get to more later. Then May 1st, again, he sold. Now he's closed off the 180s, just long two of the 170s. He sold the 175 call for $2.75, promptly buys that back a couple of days later, May 5th, for $1.60. So he made about $1.15 there. No problems there. June 6th, sold the 175 call again, this time for $2.40. He puts in parentheses, the first one worked, but I think they were both actually mistakes. I'm not sure what he means by that, if him pushing the trigger and pulling the trigger on the trade was a mistake, or if it working for him was a mistake. Either way, he went to the wall twice, so he must have liked it. On the 28th, here comes a bit of a bite in him. They closed the 175 call that he sold for $2.40. He bought it back for $5.37. So essentially lost $3 on that one. But he also still had the 170 call. Remember, listeners, he closed that out now for $8.53. Remember, he bought it for $6.42, so he made about a little over $2 there. So he's still a little bit in the hole, I believe, overall on this trade. And now he also sold two 180 calls for $3.16 each and bought a 185 call for $1.65. And looking at the chart here, back in July 28th, Goldman was trading back up right to the 175 level that he wanted, 175.95, almost 176. So now his resulting position is a 170, 180, 185 fly, a bit of a funky fly there, listeners. And now he puts in parentheses as well. Now it seems really inefficient. I think I could concur with that here, Pat. August 7th, he closed both 180 calls for $1.88 each, and the 185 call he closed for 96 cents. He has an order currently in to sell two of the 180s and a 185 for a $3.50 credit. I have the order in to recreate the fly to reduce the cost of the 170 call, since I don't think the Goldman Sachs will get above 180. Besides discussing what I've done and any suggestions you have, what would be a better way to implement my current view of Goldman Sachs, given that I already own the 170 call? Thanks for all the help already, and the future help I'm sure I'll get. Pat. Oh, well, this is the great one. I've already been diving into it a little bit. I'll give you guys some time to dive into because we're running a little bit short on time. Perhaps Mr. Uncle Mike, we'll start with you. What's your take on this litany of trades here by Mr. Pat?
Pat, you have a very interesting BBI, I'm willing to bet, based on these trades. What I'm thinking, Pat, just in looking at this, is that and going through this, it appears to me that you start off bullish on the trade, just doing a good old-fashioned bull call spread, and then during the trade, you become less bullish by selling a 175 call a couple times. And so then you turn into a butterfly, and I'm all for adjustments, but I think this one's a little bit too much of an adjustment. I think if I want to be bullish on a trade, the way with which I would do this, because initially you're obviously bullish on the trade, doing the 170, 180 call spread. The way with which I would set that up is that the second it goes below my line in the sand, whatever the line in the sand may be, whether it's 160, 150, whatever the case may be, at that point, I want to just simply get out of the spread, take my loss. Or if you're doing this with such a small amount of money to you and you're fine just sitting on this thing till October because it's a small amount of money, it's a small spec, it's a spec, so what the heck? stay in it. But doing all these adjustments, I think what you're doing is over adjusting, obviously in this case. And I would approach this in such a way to where as soon as it drops below where you think it's going to drop below, or wherever you get to your wrong point where you're wrong, just get out of the spread in the first place.
Yeah, I mean, it's worth mentioning here that the spread went against him initially. He did what a lot of people do in that scenario, which is they close the short leg because it's easy to do. He can take some profits. And then you still hold on to the long leg, the 170, thinking, hey, it's got to bounce back, right? So I'll close out the easy part, take some profits there. It's kind of hard to pull that trigger, close out the long one, and actually take the loss. He didn't do that here, which could have been one way to go, like Uncle Mike said. He then gets into this habit, it seems like, of selling these 175s to finance holding on to that long 170, and it works out for the first time for him, so he dives into that well again, and that seems to be also where he made his second mistake, because that one really came back to bite him, riding that one again in the teeth of Goldman gapping up. You think Goldman's going to keep, if you're going to come back, hence you're holding the 170. If you're being very aggressive riding these 175s, that could come back to bite you, which it ended up doing. It cost you all of the upside you were going to have for holding on to that 170, which was the main reason you got into this trade to begin with. Then he got into all that funky fly stuff, which was, we've said many times on this show, maybe sometimes a bit of over trading going on in there. Andrew, I know you're champing at the bit to get in on this one as well. What's your take here for Senior Pat?
There's just so many ways here.
that's the fun of it.
Like my first thing would be, okay, if you're going to buy something in October and you started in March, what do you expect to make on this thing, right? You paid $3, it's every dollar on that hold is hard to make when you buy a call spread that far out in time. So in the first place, you're buying a spread that's going to perform not great relative to how Goldman performs, right? Because when you buy an October spread with a March entry, you've got hugely reduced gamma. So the stock goes up and you watch your spread and it doesn't go anywhere, which is maybe why you started to buy in some of your short calls when Goldman tanked, because you're like, okay, I'm watching this thing now for a month and it's just not giving me any love. On the flip side of that also might have been a good thing if Goldman tanked in April, I think, when you're able to buy those calls back, because the spread didn't move that much when Goldman went down. So you're like, now all of a sudden they're like, okay, now I'm going to re-enter and sell these 75. So the biggest problem is, like, what's your intention? What exit price are you looking for? What are you getting into the spread for? What are the dollars you're expecting to get? So the problem is if you buy a 170 spread to get back to the 175 area, how much are you going to make on your trade? So you have to kind of work that out ahead of time. You might be in the thing, you get to run to 175 and you make 50 cents or something like that, or not a tremendous amount of money relative. You have a spread that was worth $3 and it goes to $4. Okay, if that's what you want, that's great. But you have to have an idea of how profitable the spread's going to be. And I don't think you talked about what your exit was ever. And I think part of the problem was, without knowing what you want out of the trade, it's kind of hard to get into the trade in the first place. It's one of the things at Option Pit, and probably what Mike explains to people is, what are you going to get for what you go into? So there seemed like to be a lot of confusion where you're always trying to fix problems. That being said, we found good times to buy calls at Goldman Sachs is when the volatility is very low, and I can give you the volatility number right now. We've done it a couple times this year when they put the hate on Goldman and they put the hate on volatility, and surprisingly enough, it's about at that level again, right around 14 volatility, 14.5. Great time to buy options at Goldman Sachs. They are very, very cheap, so the gamma pays. Normally what we do is we buy some calls, or we'll buy like a strangle, buy an at-the-money call with out-of-money put for protection, and then just let Goldman do its thing. And we know that with the vol that low, that generates a pretty decent return on any kind of move we have. So, what I would say is flies don't work very well in a longer-term position. They don't really give you a lot of money in any kind of short term. So the dollars you have to keep in the fly, waiting for it to come to fruition in 2 or 3 months, when you could potentially be up and out on the whole thing and not make any money, It's just, I think you have a lot of impedance problems with the goal you have and the position you end up with. So, normally buying calls or getting long Goldman, which is, fine. Volatility can get very, very, very cheap in there. For mid-July, it was trading in just around 14.5. It's at 14 again. So I don't think those are very bad levels. At that low volatility, you can buy a slightly longer term call and an out of the money put for protection and just let the thing go. And if you're going to get some performance in the underlying, the strangle will pay. So just to give you a couple of hints, volatility has been as high as 20 since mid-June. And that 6 points of volatility in Goldman Sachs is a whole lot of money per option contract. And actually, I can give you what the Vega number is right now. An October option, the Vega on that would be, Vega per contract is around $24, or 24 Vegas per contract in Goldman. So the difference between the volatility being 14 and 20, that's about $1.50 a contract. That's a lot of money. So, being a little bit cognizant when you buy these things helps. About the only thing a call spread does is it actually dampens the volatility or the Vega exposure in the trade overall. So that part was good. The problem is when Goldman moves, your call spread's not going to move very much. So like I said, just get the impedance straightened out as far as what you're looking for and the term that you're picking, and things should go a lot better.
Yeah, we probably can do a whole episode on spread adjustments. I mean, there's a lot. We can do multiple episodes on that. That's, as Pat has discovered here, and we said many times here on the show, the adjustments are often where the rubber meets the road. There's also some work to be done on the trade onset here. We're, using the right strategy to begin with, but the adjustments can also make even a mediocre strategy perform better, and some of these adjustments here we could deal with as well. But interesting stuff. Great question, Pat. I'm glad you had the courage to send this in. Some people only like to send in their winners. Look how great I am. Pat was courageous enough to send in one that didn't work out that great for him, so he could learn a little bit from it. And Pat, we could probably spend an hour just detailing this. This is great stuff. We love this. And more of you out there, listeners, have trades like this. If you're courageous like Pat and you want to send them in, I promise we'll be nice. We won't say anything bad. We've all done crazy things out here trading, so we've all been where Pat's been. So don't feel bad, Pat. But great stuff. Send them in. We love to hear from you guys. And like I said, I wish we could spend more time, but we're pretty much out of time on this one. So great question, Pat. Thanks to everybody else who wrote in. We'll get to you next week. And before we go, really quickly, let me check in with each of my cohorts here on the old All-Star panel and see what they have coming down the pike that may interest you until the next time we can all get together here on the old program. Mr. Rock Lobster, we'll start with you. It's coming down the pike over there in the land of the pit.
I'm going to be at the Money Show in September 12th, talking about butterflies adjusting, just like with this. We're talking about flies and condors on September 12th. That will be in New York, around the New York Stock Exchange and the Marriott Marquis. Also, Option Pit will be launching another boot camp soon. You're going to hear about our new boot camps. The last one was so hugely successful and people wanted more. We are going to do more. So there was a lot of learning done, a lot of satisfied people. So we will continue. My goal is to, knock on wood, have them every month. So.
And I'll be expecting my licensing fee shortly from my Options Bootcamp program, which you clearly have purloined, sir.
Yeah, we took it. Yeah, we took it.
All right, thank you for that, Mr. Andrew. And Mr. Viceroy, what's coming down the pike over there in the land of OX education?
Showcase One event this Saturday, the 23rd of August, live event in Seattle. As is the case with all the live events, Jimmy Ruzan and his crew do about 3/4 of a day. If you're not in Seattle, can't make it to Seattle, you can participate in the event live on the site. We simulcast it on the site. You get full participation if you participate in the simulcast. You can ask questions. You can hear the questions that the other folks are asking. Come to optionsexpress.com. All the events, all the education are free, and the Educate tab is ahead of the login. So you don't need an account to participate in any of the educational events.
I love that. To make the education free and open to all, and they will come, sir. Always been my mantra. Works out pretty well for us at the end of the day. All right, and last but certainly not least, Uncle Mike Tusaw, what's coming on the pike over there in the land of RCM?
A couple things. Please continue to go to our website and check out our Line in the Sand newsletters. Also, we have an event coming up in Dallas on September 18th, so make sure you sign up for that. Go to our website at rcmfutures.com or rcmwealthadvisors.com.
All right, and that is going to do it for us here. On behalf of Uncle Mike and the Rock Lobster and the Viceroy, and of course myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the program, making it such a success. And we'll see you next time right here on the Option Block.
The Option Block was brought to you by Options Express by Charles Schwab. Don't spend time worrying about your broker at Options Express by Charles Schwab. Security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets. Established financial stability. Options Express by Charles Schwab lets you trade with confidence. Stocks, options, and futures all in one account. Trade with a specialist. Visit www.optionsexpress.com to open your free account. Options Express by Charles Schwab is a member of FINRA, SIPC, and NFA.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.